Trump's economic policies are what we need to work our way out of it. So I think it's going to be a very interesting time. I think if Mr. Trump gets in, I think we could get the S&P close to 15,000 by 28 to 29. It could be one of those renaissance periods where, we have banks, we have technology, gold works, Bitcoin works, and it will be a growth phase, and we'll basically grow our way out of the deficit, which is exactly what we did coming out of World War II, which has been my difference. I think it's not the 70s, it's not the 90s, it's World War II.
One of the things I'm always saying is that it's your track record that counts. I mean, people have lots of things to say, no shortage of opinions. Some are right and some are wrong. We focused on those that are correct and the approach that got us there. That's why I'm so pleased to have James Thorne, Chief Market Strategist, Wellington Altus Wealth Management. Jim, I've been thinking about you. Well, first of all, I follow your work because it's been accurate, but I was thinking you probably have a pretty good smile on your face. I'm thinking right back to the World Outlook Conference and subsequent to that, though. You like gold. Oh, gee, that seems to have worked out pretty well. You liked Bitcoin. Oh, that seemed to have worked out well. But I think also for our listeners, overall, you were a bull on the market and didn't get distracted by the noise. You just kept on being, sort of that, of course, you could have nuances within months or whatever, but your broad theme was a bullish outlook for the market. And I suspect no reason to change that now.
No, I think, I have an old rule which says that the Fed or the central banks live in the past. The majority of consensus or mainstream media live in the present. And we as investors need to live 4 to 6 quarters in advance. So when we talk, Michael, I'm already thinking 26, right?
Yeah.
And so that's why, you get to ignore the noise and you get to basically say to yourself, okay, what do I think is going to be, what it's going to look like, in not the outlook in 2025, but the outlook at a conference in 2026. And let's start preparing ourselves and let's talk about the issues, knowing that if we're 70% right, we're superstars, right? We're not going to get everything right, but if we get the direction right and the big ideas right, then our clients and your listeners will be able to navigate the craziness.
I couldn't agree more. You've got to get that broad, big picture. There's going to be plenty of noise, though, between now and then. I mean, maybe the most obvious is, in just over 2 weeks, we're going to have a presidential election. And I'm not asking you for any political view. I'm asking you for what your observation is going on in that election and the implications, what you think, for the investment markets.
I think people should be prepared for a President Trump victory. And, we can talk about what the shenanigans are going to be like between Election Day and Inauguration Day. But I think folks have to get themselves, if Mr. Trump gets elected, which I think he will, then we're going to go into a new regime, which is going to be deregulation. And the U.S. banks are going to be deregulated. We're going to have a business-friendly environment, okay, which I think is going to be very, very good for risk assets. Of course, there's going to be volatility. Natural pullbacks are just a normal part of the business. But if President Trump gets in and he implements his platform, which I think he does, because that's what he did last year. You may not like his personality, but he does what he says he's going to do. Then I think, you've got to sit there and your listeners, and when I talk to teams or clients, it's, what does a deregulation environment that President Trump is putting themselves into? And so I expect the deficit to be dealt with in a way that credit markets will like. If they're not, then we're going to have a 1987 type financial crisis. So I think that's the case. I think in 26, people are going to initially get freaked out about his tariff policy, which I think is a bargaining tool. I think 26 is going to be a more difficult year than 25. I think deregulation in the banking sector is the only way to go. And let me just get back and deconstruct it. after the global financial crisis, monetary policy didn't work. And what we heard from central bankers or the official sector from around the world is the monetary transition mechanism has been broken. So the Bank of Canada can cut rates, but if banks aren't going to lend more money and get them credit into Main Street, it doesn't work. And if you step back and go, well, what happened? Well, banks were heavily regulated, weren't they? Right?
Mm-hmm.
Dodd-Frank, Elizabeth Warren, right? If Mr. Trump implements what he says he's going to do, you're going to have banks deregulate, right? Which means you're going to get that flow of credit going into over the cycle. Like, it's not going to happen overnight. But what does that mean? That means that, you know what? I think interest rates do go down into 26. Okay? I really do. But if he deregulates as much as his platform says, then we could get an environment where the interest rate structure of our economy looks like a pre-global financial crisis environment where they get the interest rates off the lower bound, get it up to the Fed funds rates or the Bank of Canada rate is 2.75% to 3%, and we grow. And I think that, so when I look at that between now and 28 in his term, Michael, I think that's the road. So we've got that theme that we've talked about, you and I, that's supercharged, which is every company is a technology company. That's AI. We got that, right? We've got a massive global economy that have debt levels that we haven't seen since the Napoleonic War. That's fantastic. Fantastic for gold, silver, Bitcoin. Okay? Yes. But yet what we do have, and here's the nuance, is that rate cuts aren't a magic bullet. And so the question we should ask ourselves is, if nothing changes and the banks aren't deregulated, if that way that lower interest rates gets into Main Street isn't fixed, then interest rates are going to the zero bound. I think reading speeches, listening to people talk, if Mr. Trump gets in, we have to respect the fact that we are entering into a completely new era. Now, I know Elizabeth Warren's not going to like it. I know the left isn't going to like it. But if you want to get interest rates so that they're not at zero and you want to be able to grow out of this, my suggestion to you is you need to deregulate. And that's what Mr. Trump's economic policy is. So I think he's going to win. I think that's what's in front of us. And as I say to the teams or our clients, trade what's in front of you, right? That's what I think look like to the end of 25.
Let's come back to the deficit, because of course that's a huge issue right now. I think it's 125% of receipts just go to interest, military entitlements, that kind of stuff. But that's where I don't want to Barbara Walters this too much, but that's where Elon Musk is so interesting. If he indeed has a powerful role in that administration, and it's hard to imagine with his background and personality that it won't be powerful if he's very clear, reported to have put $75 million into the campaign recently, so he's very interesting because, of course, look what he did in Twitter. He walked in and 40% of the workforce was gone. That him looking at efficiencies within the federal government alone could result in massive changes, significant savings, and a reduction in the deficit, along with what you're suggesting here, Jim, is a big, growth spurt, which of course increases government tax revenues. Even in the stock market, that's such a key component now for government revenues. So, yeah, it's a fascinating scenario you're painting there.
It is, and this is, we were talking before we went on air about how, the cross currents, and it's really interesting because you don't know, who the Cowboys are and you don't know who the Indians are. It's really hard to delineate who's on what side, but it's very interesting when you hear the Musk boys talk about SpaceX, right? Mm-hmm. They talk about one of the biggest advocates of SpaceX was Senator John McCain. Because he was the one that basically got into the government, and because it's cost plus, right? The government, the generals want to be able to control the technology. right? And the I'll call it the military industrial complex. They just want cash flow, right? And if the government doesn't care about efficiencies, think about SpaceX, then a rocket that should cost 50 million costs $1 billion.
Yeah.
Think about what is happening in space. There's no conspiracy theories because it's happening right in front of us. Think about what's happening within SpaceX, within Starlink, within the military having confidence that they can get into these contracts with these companies and then they can start cutting out the fat.
Yeah.
Right. And so, we've got a moderate Democrat, and I would picture myself, and I say to you, I'm up here, Mike, they think I'm a Republican. If we went back to my old neighborhood in Washington, D.C., I'm viewed as a moderate Democrat. I am a moderate Democrat, right? That's my view. But I'm a Canadian. Up here, I'm a conservative. I'm a moderate conservative. Okay, fine. But Musk goes and says, look, I'm a moderate Democrat, but let's be clear. Trump's economic policies are what we need to work our way out of it. So I think it's going to be a very interesting time. I think if Mr. Trump gets in, I think we could get the S&P close to 15,000 by 28 to 29. It could be one of those renaissance periods where, we have banks, we have technology, gold works, Bitcoin works, and it will be a growth phase, and we'll basically grow our way out of the deficit, which is exactly what we did coming out of World War II, which has been my difference. I think it's not the 70s, it's not the 90s, it's World War II.
Let's come back across the border, because the difference has been apparent for quite a while between the performance of the U.S. economy and the performance of the Canadian economy. Whether we could talk so many different measures, but growth, let's come back to growth, productivity, the welcoming of capital investment. I mean, the U.S. still benefits from, when there's uncertainty in the world or people looking for opportunity, as you've been talking. I mean, you were at the Outlook conference saying, I'm going to beat you over the head if you don't understand you got to have your money in the US and not Canada. But let's elaborate on that now. Let's go fast forward a bit from that time. I mean, nothing's changed. I mean, the outperformance of the American stocks has been dramatic. Your thesis of being involved, and it's been a thesis that we followed on Money Talks for a number of years now, and technology being one of the reasons, but Canada is not in that same position. So give me a couple of looks at Canada.
Yeah, firstly, I talk to a lot of people, and it's funny because I'll get a call from somebody, a journalist in London, very well placed, looking at Canada. He reads my stuff like you read it, and he basically asked me, why is nobody in Canada basically sounding the alarm bells but you? Why are you the only one? Why don't Canadians objectively see what is actually happening, right? Or when I go down to New York quite often and I talk, and hey, I'm down on Fed Day on American TV, right?
Yeah.
And so talking about it, and they ask the same question, and I just basically say, look, we don't have an industrial policy. Look, so, and then let's go back to the conference, right? And you've got these wonderful mining stocks. Well, I sit there and go, look, we have been gifted. Our country has been gifted heavy rare earth minerals, which are critical in this world that we have with China and the United States and geopolitical. Why hasn't anybody had the foresight to basically say, this is what we're going to develop it? We're going to make sure capital goes into it. We're going to build the supply chain. Why hasn't anybody done that, right? Or the CHIPS Act, right? The Americans are bringing back semiconductors. I can't believe somebody from Ottawa isn't down to Washington and basically saying, what areas can we fulfill in terms of the supply chain so that we can have a strong regional semiconductor industry, and how can Canada play a part? This isn't cold fusion, Michael. This is basic economics and having a foresight. And unfortunately, the folks in Ottawa don't see that, right? And so, to your point, it's going to be painful in Canada for a long period of time. Now, is there a catch-up trade? There's always a catch-up trade. Why? Because investors think that interest rate cuts are a magic bullet. They're not. They are not. So and I would suggest to you, Mr. Macklin knows this, Mr. Powell knows this, I think Mr. Carney knows this. Experienced central bankers understand the predicament. That's why Mr. Macklin and Mr. Powell have pivoted. They understand the reckoning in 25. They understand that a rate cut today doesn't get into the economy until 26, Michael, not 25, 26. The cement has been poured for 25. What we're dealing with now is what is the psychological evolution of the investors for them to wake up and go, oh my gosh, you know what? Tiff Macklin's going to bring interest rates down to 275 by this time next year. And he is. That's what the credit market's saying. But when is the investors going to sit there and go, it doesn't matter. Nothing's fixed. We need an industrial policy. We need some adults in the room. Right? That's where we are. And so in the States, we get that early. Right? I think, the way it looks like now, we're not going to get an election in Canada until October next year. So we're lagging. So it's great because, Michael, the number one rule in investing is liquidity trumps fundamentals. And that's what we're experiencing now. A whoosh of liquidity. Rates are coming down. But eventually, fundamental matters. And once we start getting into that era where fundamentals matter, Canada doesn't look that good.
Well, I come back when you were saying about ringing the alarm bells. I mean, it was unprecedented when the Bank of Canada stood up and had, ringing the emergency alarm with productivity declines, But I think it's as simple as it's not registering with the progressive ideology. It's not, it's not a priority for the Liberal government. Their priorities, I think, have been well spelled out. It's climate change, LGBTQ2+, and some other sort of gender-related issues. That kind of stuff. And Canadians are going to be faced with a vote. What do you want? But I think your point's so important that when we're looking at an interest rate decline, this coming week in Canada, their eyes are over a year out for the impact. And thank goodness they're taking long-term. We don't need traders in the Bank of Canada. So I just think it's an important point for people to grasp. But they're trying to set the foundation. But the lack of performance, whether we're talking stocks or talking economy, should have people at least asking, why is the States outperforming us so dramatically? And for investors, as I say, you've been giving that answer for ages, but giving that advice, you got to be in the U.S. for the investment until this changes.
It is. There is a very famous tape in the archives of the CBC of Pierre Trudeau in 1980. I know I'm going to trigger you, Michael, when I say Pierre Trudeau, but he's at the International Convention of Liberals, right, in Ottawa. Pat Duffy he was on CBC News, the national. Pat Duffy's doing it, and Trudeau stands up and says, "Look, the Liberal Party is going to be sent under my watch. The Liberal Party is going to be center. We're not going far left. That's Papa Trudeau. That's Pierre Trudeau saying it.
Yeah.
His son took it far left. He's now you got the Liberals and the NDP fighting over the Progressives, and the pendulum is going to start swinging back the other way. And so what is the structural? The United States has alternative intelligence, right? The United States has technology. That's so when I get asked about why don't I like Canada, it's not. Look, it's my job is to tell you where to go fishing that will help you the most in terms of achieving your financial goals. And if it was Canada, I would say Canada, right? When I sit there and I say President Trump is going to win, I am trying to say objectively, looking at the data and what is going to happen and what does this mean for investors. My job isn't to bring my emotion into it. My job is to sit there and say, look, let me be controversial up here. Global growth is going to slow next year. They're too late. Saudi Arabia has come out and said they're going to protect market share. They've already done the shot across the bow. let's go back to 2014, folks. All those folks in Alberta, right, that listen to your show, right?
Mm-hmm.
What happened to the price of oil when the Saudi Arabia in 2014 defended market share for a short period of time? Now, I know everybody's going to freak out and say the companies are different. Yes, they're better managed than they ever were. They don't have high levels of debt. You're not going to have the bankruptcies like you had in 2014. But what do you think mainstream media or the consensus is going to say when oil has a cup of coffee at $50, right? West Texas, right? Long term, the thesis is intact, right? But in the short term, can you ride that out? Can you ride out the growth scare, the hysteria that's going to happen? If you can't, then now's the time, and you're overly extended and you have excessive overweights in energy. I would say it's prudent to basically peel it back a bit. Now's the time to sell, not when it's 50, because when it's 50, that's the time to buy. It's buy low, sell high, repeat. And so I think that's the type, and remember, Mike, the economy is not the stock market and risk assets. And while all this is coming on in the real economy, you've got people sitting there saying, well, Trump's going to he's going to deregulate everything. And we've got interest rates going down. And oh my gosh, I got to get myself positioned. And therefore, I want to position myself in risk assets. And what works? Gold, Bitcoin, silver. What else works? The technology names that we're talking. And then I add to that anything that's designed to, or that gets exposure to building out AI server farms. Elon Musk built one in 19 days when it would have taken 4 years. So you got that. And then I'm saying I think you really got to take a look at the U.S. banks, because I think if they get deregulated, then there's going to be a lot of mergers and acquisition. There's going to be a lot of economic activity. They're going to be able to grow their business. And that's the solution. And that's how we grow out of it. So that's sort of the roadmap I'll give you, for the next year, let's say.
Well, that's excellent. And I just want to remind people they can go and see your work, though, by going to Wellington-Altus, A-L-T-U-S, Wellington-Altus.ca, because you're doing a monthly update, full monthly. You're on Twitter, so you can, Dr. Strategy, but they can just put in James Thorne Twitter and it'll come up for you correctly, because obviously you're updating on a regular basis. And as I say, I think it's a key period. Lots of noise coming. Your outline, though, of the broad map, I think is really worthwhile for people to go back, listen to again, and get the roadmap clear for you. So, Jim, thanks so much for finding time for us.
Be safe, guys. Thanks for having me.